warm welcome. You're watching Business at 9 with Shibani joining from our Mumbai studios and myself, Jude Sanath, coming to you from Chennai. We're back focusing on West Asia now, even as tensions in the region continue to simmer after US President Donald Trump threatens Iran with economic warfare. Now, Iran has hit back by saying that Trump's comments are a diversion from the US's own domestic problems. Meanwhile, traffic in the Strait of Hormuz continues to dwindle as both sides rule out talks. So, Shibani, it seems like an all-out clash in the West Asian region all over again, even as that threat of economic uncertainty continues to prevail over us.
Conflict in West Asia has in fact led to pressure on oil. Brent Crude has rallied above $90 per barrel. US indices too have taken a hit. The Dow Jones is more than 200 points down, while the Nasdaq is in the red, down over 0.50%. A pullback in Walmart shares is also weighing in on the broader market, with the S&P 500 down more than 0.20%. My colleague Mitali gets us a roundup of all of this.
Rightly mentioned. So, if you see the Wall Street, it is quite under pressure today with the higher treasury yields, the rising crude prices, and also the fresh corporate signals keeping the investors quite cautious in today's trading session. The Dow Jones is down around 0.7%. The S&P 500 is lower by about 0.4%. Nasdaq is down nearly 0.9%. And the key pressure point as of now is the bond market. 10-year treasury yield is back around 4.7%, while the 30-year yield, it remains above that 5.2% mark, keeping concerns around the inflation as well as the borrowing cost firmly in focus. Oil is adding further to the pressure, and Brent Crude is around $93.6 a barrel, up 2.2% from the last closing price. While if you see the WTI crude, it is around $86 above that mark, higher by 2% again. And rising geopolitical tensions further are adding a risk premium to the crude, raising fresh concerns over inflation. On the corporate front side, the Walmart is weighing on sentiments. The shares of Walmart, they came under pressure in today's trading session after the retailer flagged softer momentum in their sales and also a weaker than expected near-term outlook, despite beating the street's estimates. Meanwhile, the U.S. labor market remains relatively resilient. The initial jobless claims, they have fallen now to 206,000 for the week ended August 15th, but they were quite below the expectations of 210,000, and the 4-week average also has risen to 1.799 million. So the markets, the takeaway is quite clear for today. The job markets, they are holding up, but the higher oil prices and the elevated bond yields, they are keeping the inflation as well as the interest rate risk quite higher. And yes, the pressure that is there in the US markets.
Well, thank you very much, Mitali, for that all-important update on how the markets are faring, especially in the context of heightened geopolitical tensions. But to add some more perspective and context to this, I'm now being joined by Arnab Das, global market strategist, on the show tonight. Arnab, thank you so much for joining us on Business at 9. Would you say that it's rather inevitable at this point in time and place, Arnab, that we could see crude rallying further up higher, going back to the territory of where we were perhaps a few months ago when the conflict first began, before we saw some semblance of truce? Is it inevitable that we're going back a few months, going by the present-day geopolitical situation in West Asia? Arnab.
Hi, thanks for having me back. Listen, I think, under these circumstances, saying that something is inevitable is always very dangerous, right? But I think, what is happening that's quite a bit different than we've become used to is that right now, President Trump doesn't seem to be managing expectations and trying to manage or manipulate the price of oil down, right? If anything, not only is Iran being escalatory, but Trump also in the last few days has been escalatory. And of course, this comes on the heels of signals from the U.S. Treasury that it's quite concerned about the rise in U.S. yields and trying to head that off, both through the yen intervention a little while ago and then the buybacks in the U.S. Treasury market in the long end in the last couple of days, right? So I think, a lot of things are coming together. There are all, I think, in one way or another related to the fact that the U.S. has a very large fiscal deficit. It's had that deficit for a long time. It's being exacerbated now by the inflation risk from the Iran war and the shortage of oil supplies that may get worse the longer the blockade of Hormuz continues. and of course also exacerbated by the fall in the yen and the threat that intervention by central banks to support their currencies in Asia and North Asia might also affect treasury yields, right? So a lot of things coming together: inflation pressure, downward pressure on growth, upward pressure on yields, downward pressure on the yen. All of these things pointing to upward pressure on yields, affecting, as has been said, affecting the stock market and the AI trade, right? So
Right,
quite a lot of things to unpack. Yeah.
right, Mr. Das, without mincing words, what is the absolute ceiling, according to you, on Brent crude, and how long can the global economy, in fact, survive it?
Well, I wish I knew what the absolute ceiling was, and if I did know for sure, I wouldn't tell anyone, right? I would trade on the basis of that.
For us, because
Look,
yesterday, a ballpark for us, because yesterday an expert pointed out that we are heading into the $125 a barrel territory yet again.
I certainly wouldn't rule that out. I would say, however, that if the price of oil does surge very rapidly to very high levels, I think we would see Trump try once again to manage the price down, right? I'm not trying to say that, $90 or $95, $100 is in his comfort zone, but I think he has shown us time and time again that if the markets turn against him, he will do something about his rhetoric or maybe even his policies in order to calm the markets down. I don't see why the price of crude at this juncture or the bond yields in the US or the stock market should be any different this time around. Having said that, I do think the market is recognizing that Trump cannot simply taco and walk away from this problem in Iran, and that also that there are no easy solutions. So I would tend to agree that the price of oil has a higher floor than we had thought, and maybe has an upward bias to it, which is a challenge for bonds, challenge for inflation expectations, and a challenge for, as you're sort of implying, challenge for the global economy, which has been resilient so far. Now, I think that resilience is partly about the U.S. AI story. It's partly about the fiscal story and the support for growth coming from Europe and Germany in particular. And it's also about the fact that China has reduced its purchases of oil. All those things are still to some degree in play. So I think they'll probably work to impose something of a ceiling on the price of oil and maybe a dampener on how fast it goes up. But nevertheless, that upward bias, I think, will be there. And I think it is a challenge for the global economy and the markets.
Right. Arnab, let's talk about inflation there for a bit. You've been seeing both the Fed and the RBI maintain a hawkish hold when it comes to rates. But given the fact that the fear of inflationary pressures rising is well and truly upon us, what kind of a change in stance do you perhaps foresee, in central banks around the world, if oil should continue this trajectory and we see geopolitical uncertainty around the situation in West Asia? What happens to the impact on inflation?
I think you're right. I think, the inflation pressures are there. They're being exacerbated not just by the war and the shortage of oil that may be taking shape. They're also exacerbated by the strong investment process from AI in the US and indeed from the fiscal pressures in Europe and in the US and to some degree in Japan as well. So I think, that all adds up to monetary restraint from central banks. I think, I sort of agree there'll be hawkish holds at a minimum. In some cases, there will be rate hikes. I think the market is well aware of that. Much of that is priced in. I think you're seeing the rhetoric from the many members of the FOMC, voting and non-voting in the U.S. becoming more hawkish. And, I suspect that the dissension in this kind of say nothing, do nothing strategy of the Fed chair, the dissension against that points to a hawkish bias that the market is reading, right? Even if it's not being said explicitly by the chair, that's the direction of travel. So I think that I sort of agree that is another set of challenges in this complicated time. Having said that, I don't think all is lost. I don't think we're going to have a big inflation. I don't think we're going to have a big fiscal crisis or a big oil crisis. The risks of those things are certainly higher than they were. And that riskiness has to be priced in. And as we've said, that's a bit of a challenge to the resilience of global growth that we've seen so far.
Right. Before we wrap up this conversation, Mr. Arnab Das, now isn't it time for the OPEC and OPEC Plus members to step up production too? Because, they themselves within, there is absolutely no unity, and many of the member states are not talking to each other at this point in time. There is a lot of, conflict within themselves in the region and outside. Isn't it time, because there are inflationary concerns, there is energy crisis that is looming large, over the past couple of months and still staring at us. The worst is not behind us. So isn't it time for them to, probably step up production and, pump in some oil to probably stop this rally?
Well, I think you're right. I think, the first thing to say here, I think, is that, of course, UAE has left OPEC Plus, and, the tensions have been there for a long time, but have been crystallized to some extent by the war. There's more of a geopolitical tension there with UAE seeming to tilt towards the United States and perhaps Israel in its geopolitics and its foreign policy, and Saudi Arabia not so much, tilting towards Pakistan, perhaps, towards Turkey, and also, still keeping the door open with the U.S., but implying the possibility of tilting towards China. So I think the geopolitics affect OPEC Plus. I think you're right. It would help to pump more oil, but of course, the problem is that some of the oil will be blocked in the Gulf and in the Strait, perhaps in the Red Sea. With Iran having, through its Houthi proxies, attacked there as well, and also threatened Suez, right? So a lot of blockages, a lot of choke points around the Middle East and around the supply of oil to the world. Having said that, if there is more oil being pumped, that would help to keep the long end of the oil curve, the futures curve, down, and sort of mitigate that inflation pressure.
Right. Well, like you said, Arnab, lots of choke points there, especially in the West Asian region, including the Strait of Hormuz. Let's hope for everyone, including inflation's sake, that they ease out soon and the world goes back to some semblance of a peace. But on that note, thank you so much for joining us on Business at 9 and breaking down some of these insights for us.
Thanks for having me.
Sticking with West Asia, let's take a look at what the situation is like on the ground. And for that, we're joined by my colleague Sumita to give us the roundup of what the situation in West Asia is faring at the moment.
That's right. In fact, it seems that conditions in West Asia are only escalating, and there is no diplomatic breakthrough that has been achieved so far. In fact, in the very latest, the US President Donald Trump has threatened to sanction countries that trade with Iran, and this is as part of his new economic warfare. In fact, President Donald Trump tweeted that, and in fact, he put this out on his Truth Social platform and said that Washington will impose tremendous economic consequences on any country that provides financial or commercial lifelines to Tehran. And in fact, these are going to be targeting oil smuggling, cash transfers, exchange houses, ship registries, and front companies. And in fact, he's also said that Iran will never have a nuclear weapon. Now, as far as top export partners are concerned, well, India does not really figure, but India definitely is one of the top import partners as far as Iran is concerned. So, of course, no immediate diplomatic or military ramp-off is currently being seen. And in fact, on the back of that, that social media post by President Donald Trump, Iranian Foreign Minister Saeed Abbas Araghchi has dismissed these newly announced sanctions campaign. In fact, he says that this is a diversion from domestic American issues, and he's warned that the so-called economic D-Day is only going to bring further defeat to Washington. Meanwhile, Iran's armed forces, they've warned Gulf countries against assisting the U.S. military. They've said that such support could make them participants in U.S. operations. And remember, this is coming in after the UAE suspended all trade with Iran.
Right. Now, SEBI has released a report on the profitability in individual traders of FY27. As per the report, 87.7% individual derivative traders lost money in FY26. Individual traders lost 91,685 crore rupees in FY26, down 18% from FY25. Market regulator has also come out with data on trading behavior that indicates 97% of individual traders were predominantly option buyers and 90% of option buying traders incurred losses. My colleague Anurag Shah gets us more details on this.
Very granular data published by market regulator SEBI, and as per the SEBI's data, overall FNO traders losses has decreased from 1.12 lakh crore to 91,000 crore, but average loss per trader has increased to 1.17 lakh. First time in last 10 years, the FNO traders base has decreased, and 46 lakh traders who traded in FNO in FY25 exited in FY26. So that is a detail of SEBI's study. 43% of FNO traders were of below age 30, and out of that 43%, 89% traders suffered losses. On the behavioral part, 97% of individual FNO traders predominantly buy options only. Only 2% traders were option sellers. Other than that, more trading experience did not lead to the better outcome. That is also finding of a SEBI study. And only 0.5%, 0.5% active traders throughout FY22 to FY26 have made profit in all 5 years. Only 0.5%. Other than that, 43% of FY25 traders stopped trading in FY26. 18.6 lakh FNO traders had no cash market turnover. So this is also interesting study. And SEBI study finds that younger, lower income and small portfolio traders showed higher trading intensity.
Well, some very interesting findings there from that report. But moving on now, it's time to slip into a very short break. But Business at 9 will be back on the other side. So don't go anywhere. Keep staying tuned to ET.
Welcome back. You're watching Business at 9. I'm Shubhani Garat, and joining us from Chennai is my colleague Jude Sanit. Now, a potential breakthrough in cancer treatment. Moderna and Merck's personalized mRNA cancer vaccine has in fact delivered positive results in a late-stage melanoma trial. The trial met both its primary goals, reducing the risk of melanoma recurrence and the spread of the tumor. The results have also triggered a massive reaction on Wall Street, with Moderna shares surging 177% in a single session. Mithali brings us more about the vaccine trials.
Right, so Moderna as well as Merck, they are reporting a potentially major breakthrough in the cancer treatment. Now, Moderna's personalized mRNA cancer vaccine, which is called Intismeran, it has delivered quite positive last-stage trial results for melanoma, and the treatment met both the primary goals of this test, reducing the cancer recurrence as well as preventing the cancer from further spreading. The vaccine is personalized to the generic characteristics of each patient tumor, training the immune system to recognize and also attack the specific mutations present in the cancer cells. The phase 3 trial, it enrolled nearly 1,137 patients whose melanoma had been surgically removed via this drug, and they received either the vaccine combined with Merck's Keytruda or Keytruda alone. The approach could potentially expand to other cancers as well, including lung, breast, as well as the pancreatic cancers. Moderna says that thousands of high-risk melanoma patients could benefit if the treatment is approved after this trial, with the companies already in discussions with the regulators. The news also triggered a huge reaction on Wall Street, and Moderna shares, they surged over 177% after this announcement came out in a single session, wiping out around 5.5 billion in the short seller positions. Cumulative short sellers for the year are estimated to nearly be around $8 billion. And the bigger takeaway around this report suggests that the personalized mRNA cancer vaccine, it could signal a new era in the solid tumor immunotherapy.
And staying with health, there's an all-important health update from Maharashtra, where the state FDA has banned the sale of edible oils in loose or in loose form. It's also issued a ban on the repeated reuse of frying oil. at establishments. In fact, violators, the FDA says, could face imprisonment or fines up to 10 lakh rupees. My colleague Akansha joins us with more details on this all-important development.
That's right. Maharashtra FDA is now tightening rules on the edible oil sale across the state with a new compliance order issued against the entire edible oil supply chain. Under this order, loose and unpackaged edible oil sales will not be allowed across Maharashtra. Edible oil, in fact, will have to be sold only in sealed and tamper-evident packs. Now, the order also says that used or rusted cans cannot be reused for storing or selling edible oils, and at the same time, repeated reuse of frying oil has also been prohibited. Now, this order is not limited to the manufacturers. It covers the entire supply chain, including manufacturers, distributors, retailers, and online sellers as well. Now, another important thing to note here is that the requirement for multi-sourced edible oil. Such products will have to carry egg mark certification along with the details of the oil composition. Mustard oil will also have to be sold only in 100% pure form. The FDA has also set a limit for industrial trans fat edible oil at 2%, and oil with the total polar compounds or TPC above 25% cannot be used for frying. Another important thing to note here is that the violations could attract penalties of up to 10 lakh rupees along with the suspension of the license. So overall, the focus is on tightening the sale of edible oils across Maharashtra.
Now, moving on, the Global FinTech Fest 2026 is expected to see significant rise in investor participation, with around 500 investors expected compared to a roughly 250 to 300 last year. Discussions will focus on emerging trends, including tokenization and stable coins, while AI and risks surrounding it will also be in focus. Here is G. Padmanabhan, former RBI Executive Director, and let's see what he had to say about the key themes at GFF 2026.
I think in every GFF, when we select the theme, it is carefully chosen to make sure that it captures the developments that have happened since the last GFF, right? So this time, if you look at the theme that I've selected, we have talked about agentic AI, we have talked about quantum computing. So quantum is included. Then we are talking about trust, because in the global, in the financial system, trust becomes very important. So trust in a connected global system, plus at the same time, the inclusive growth. So while we facilitate these discussions on new topics, for instance, this year I presume that on the issue of tokenization, stable coins, etc., where developments are happening.
Well, with that, it's a wrap from all of us here at ET Now on Business at 9. Thanks so much for watching. From Shubhani and myself, it's good night and goodbye.